Good morning and welcome to Business Lens on Rapid Television Abuja, and it is great to have you with us on this edition where we talk about numbers and how it affects you. So let's begin with the key business trends that matter right now, starting from the headlines. The federal government has formalized the launch of a $50 million Impact Innovation Fund that is backed by a $14 million grant from the JICA and up to $20 million in matching support from the Nigerian Sovereign Investment Authority to finance startups addressing critical social challenges. And to the next one that says the foreign investment into Nigeria's manufacturing sector fell 54.11% to $463.52 million in the first 9 months of 2025, even as total capital importation surged 131.96% to $16.78 billion, driven largely by portfolio inflows accounting for over 80% of Q3 capital. The next story says Nigeria's total public debt has risen to 153.29 trillion naira as of September 2025, which went up 893.87 billion naira quarter on quarter, with the country's debt stock climbing to $103.94 billion amid continued growth in domestic and external borrowings. And to the next, where the Debt Management Office is set to auction 800 billion naira in reopened federal government bonds today, February 23, offering coupon rates between 17.95 and 19.89% as yields ease below the 20% mark in a sign of softening borrowing costs. To the next, where Nigeria's capital inflows surged 380% year-on-year to $6.01 billion in Q3 of 2025, but the Center for the Promotion of Private Enterprise, that's the CPPE, warns that the current capital flow structure still exposes the economy to significant risks despite improving investor confidence. And in capital markets, the SEC says Nigeria's capital markets contribution to GDP has climbed to 33%, with a total market capitalization surging 125% to 123.93 trillion naira from the above about 55 trillion naira in April 2024. This is according to the Securities and Exchange Commission's data. Still on SEC and on capital markets, experts say the Securities and Exchange Commission's plan to attract 20 million new investors in 2026, and they say it is achievable, but only through strong collaboration with fintech firms, banks, exchanges, and other stakeholders to drive broader retail participation. I am Divine Alex. We will look at these stories and more after the break. Please stay with us. You are welcome back. This is still the Business Lens on Rapid Television Abuja. My name is Divine Alex. Now, joining me on today's conversation is Economist Abiola Adekule from Key2 Markets. Good morning, Economist Abiola. How are you doing? Okay, I can't hear you. I don't know what is going on.
Can you hear me now?
Yes, I can. I can now.
Wonderful.
Okay. Thank you for being on the show today, this morning. Now, digging into it proper, right? Let's start with Nigeria's total public debt that rose to 153.29 trillion naira as of September 2025, increasing by 893.87 billion naira quarter on quarter and climbing to 103.94 billion dollars, creating growing fiscal obligations. Now, with debts rising sharply domestically and externally, what does this mean? What do you think this means for future budget priorities and borrowing costs?
Debt rising basically means that the country is borrowing more than their revenue, because it means you have a negative net balance. For example, if you are importing a total of $1 million, and you are exporting $500,000, I'm just giving an example, they will tell you that you have a net positive, balance, meaning that you are actually, you have a net negative. That means that you are importing more, than you export. And in this sense, it means that we are spending much more than what we are making as a country. And to actually close that gap, we are borrowing, to close that gap. And that borrowing is going into our debt profile. What it means is that in the future,
okay,
the people that will be willing to borrow us money might have reduced. That is one, because everybody borrowing money also is looking at the fact that will these people be able to pay? There's a difference between if you will be able to pay and if you are willing to pay. There are two different things. The ability to be able to pay means that your revenue is doing well. You have things that you can actually use to pay. The money is there, and the willingness is also there. So what it means for future budgeting is that if we don't get our revenue up, we'll keep digging deep into the debt space, and it might affect those that are willing to loan us money. That's one. Two, it might drive us into an area of higher interest rates, because what usually happens is that the guys that will give you the low interest rates, maybe you've exhausted the quota you have and you've not paid back, then they are not willing to give you more loans. So you can now go into other areas, and those other areas might say, we are not charging you, for example, 6%, we are going to be charging you 8%. So the effect on future budgeting is that we'll be taking on most likely more expensive loans.
Okay.
And also it will still be digging us deeper into the hole, which will make it harder for us to come out.
Okay. I know that we've talked about this, and then we said that in 2026 we are going to be borrowing less. Do you think that this is somehow going to be, working in our favor to make sure that we reduce the level of borrowing that we would have done this year? And then if we say, okay, this is working to assist us with our targets for 2026 to reduce our borrowing, do you also think that there's a way that we could be able to cover our deficits if we are to be thanking God for this whole situations?
Like I said earlier on, there's a difference between willingness and ability.
Okay.
Yeah, as I am now, I want to be a billionaire. It's wishful thinking. But do I have what it takes, or do I actually have the money to be called a billionaire? No. So for Nigeria, it needs to go beyond we want to reduce borrowing.
Okay.
In fact, you don't even need to tell us. What we need to see are the things you're actually doing, okay, to reduce the borrowing. Which takes me back to the revenue issue. People, when we were growing up, there used to be this mindset: Nigeria is a rich country, Nigeria is a rich country, blah, blah, blah. But growing up, I discovered that Nigeria is actually not as rich as we say we are. Potentially, yes. But in actual fact, no. We can see we have mineral resources, we have all that. But if all those things are not put in use, then where's the riches?
True.
An average Nigerian is still earning less than 50,000 naira a month. A bag of rice is about 50,000 naira. Are you saying that you're working for a bag of rice for the whole of the month? So wishful thinking is not enough.
Yes.
Potential riches is not enough. Somebody can be in the midst of food, and those food, if they are not cooked, can die of hunger. Meaning that the guy had potential food, but there was no food. So you can be in the midst of plenty and still have a lot of poverty. So it goes beyond the government saying that they want to. We need to actually see them do it. How would they do it? Increase revenue. Go into areas that let every minister be working. There's a minister for solid materials, solid minerals. There's a minister for labor. There's a minister for works. Let everybody be doing their work. At the end of the day, the addition of all this together will increase the income of the country. And now we can now start having the discussion about us borrowing less. So we being willing to do it, okay, is not enough. We need to actually have this to stop borrowing more. So, and there are two ways about it when it has to do with budgeting. It's either you reduce your budget or you increase your income. Reducing budget means you need to cut government expenses a whole lot, but we are not seeing that. Oranso's report is still there. It has not been implemented for years.
Okay.
So these are the two options: increase revenue or reduce budget. The most likely option is to increase revenue.
Okay. So how do you think this level of debt, can affect public service delivery in terms of infrastructure spending, or maybe a naira stability?
For public service, they'll always get their salary anyway, so they'll keep borrowing, if they need to.
Okay. What about Naira stability? Because,
Yeah, can you hear me?
Okay.
Yeah, can you hear me now?
Yes, I can hear you now.
Sorry about that. So for infrastructure, it's always going to take a hit. And the reason I'm saying that is because we've seen in time past, agencies, ministries will have almost 100% what's it called, completion rates in terms of recurrent expenditure. But when it comes to capital expenditure, the completion rate is abysmal, is very poor. What does that mean? It means that salaries, ESTA codes, traveling allowance are always prioritized ahead of infrastructure. So if, for example, for any reason we don't have a complete budget, believe you me, we'll have complete recurrent expenditure. People will collect their salaries, people will be paid allowances. So who's going to take the hit? The hit is going to be on the capital project. So the more the debt, the more the deficit, the more delayed infrastructures at the end of the day would be.
Okay, so let's take a look at Nigeria's total capital importation story that surged 16.78 billion naira in the first 9 months of 2025. That is up 131.96%, even as foreign investment into manufacturing plunged 54.11%. Why do you think, financial sector money growing, why this, what's it called, financial sector money growing while real sector capital shrinks? Why is it growing and this other one is shrinking? What do you think is the reason behind it?
Well, it's the same reason why you have a country that has a very high level of poverty.
Okay.
People not being able to take care of themselves. But you still see sports betting growing at an alarming rate. It's all about hot money. It's all about the fact that at the end of the day, people are just pushing in funds that they know they can quickly pull out, at a short period. When it comes to FPI, which is a foreign portfolio investment, has to do more with markets, okay? Which usual is 1 year max, usual. I'm not saying it cannot go beyond or below. Then when you talk to FDIs, I talk about FDIs are foreign direct investments, which has to do more with infrastructures. Now, when we talk about infrastructures, what it means is that the money will stay for a longer period of time in the economy.
Okay.
So if the economy is not, looking so interesting to foreign investors, usually they will go towards FPIs, which does not include manufacturing, than go to FDIs.
Which includes manufacturing.
You can have your stock market doing fantastic, doing very well, but at the end of the day, infrastructures are not coming. What that tells you is that investors are still a little bit weary, of your economy.
Okay. Now, because we need to let people understand what this means for them, what does this mean for jobs? For ordinary Nigerian who is looking to get into somewhere, what does it also mean for industrial productivity in Nigeria?
Okay, what employs more? The question is what employs more? Does the stock market employ more than the manufacturing sector, for example? No. If, for example, I want to build a refinery, even if it's a modular refinery, I'm going to hire the direct staff, the direct engineers, the builders. Those builders are going to need where to stay. That means the real estate around that area is going to, have some effect on it. Those people are going to need what to eat during the period of the building, which can be 4 or 5 years. That means that whatever is going on around that area, food has to be involved. People have to come and give them food. Now, there's a whole lot of secondary sectors that are going to be affected, all because you want to build a refinery in a position in a particular location. Now, compare that with the fact that you have a couple of guys that have millions of dollars and want to invest in the stock exchange market. Now, I also know that the stock exchange has secondary effects, but it's not cannot be compared to something like manufacturing. So what it means to an ordinary Nigerian is that there might be a decline in the number of jobs available. Because if a lot of real sectors are not receiving FDIs, then at the end of the day, how do they create more jobs? How do they expand? How do they take on more projects? So the simple term is that more jobs will not be available, and the ones available might even be reduced.
Which is a sad development. Let's take a quick swipe to the Securities and Exchange Commissions that plans to attract 20 million new investors in 2026, which is a target experts says requires collaboration across fintechs, banks, universities, and exchange. Now, do you think this is realistic? Those 20 million new investors that they're targeting, how realistic do you think this is? And what role do you think the fintech platforms can play to get us to where they plan to get to?
Well, 20 million investors is a whole lot.
New investors, 20 million new.
New investors. 20 million is more than some countries, and for you to understand how big that is, you need to understand that for you to be an investor, first of all, you have to be 18 years.
Okay.
But realistically, you find out that investors are people that have some level of monies with them. So usually we're talking about people above 30 years. So you're looking at between 30 and 60 years, 20 million people is a whole lot. It sounds so theoretical. I don't think it's so practical. But like they say, you aim for the sky. If you don't hit the sky, you land on top of a tree, which is still better than being on the ground.
Okay, so while we talk about this new push to be able to attract 20 million new investors, how could this deepen retail participation and market liquidity?
Well, since the target is so high, that means the inclusivity has to also be very broad.
Okay.
Which means that it is going to go deep into retail territory. I think that with good orientation, it's something that will actually increase retail participation, which is what they are looking for.
Okay.
I think it will affect as an increase in retail participation.
Okay. Now let's go on a quick break. When we come back, we'll continue the conversation. Please do not go anywhere. Stay with us. You're welcome back to the Business Lens of Rapid Television Abuja. My name is Divine Alex, and we are discussing the business headlines that matter as of today. Now let's turn quickly to the market, where Nigeria's capital market now contributes 33% to GDP, with a total market capitalization jumping to 123.93 trillion naira, which is a 125% increase since April 2024. This is good, right? I have economist Abiola Adekunle, who has been with me. Are you still with me?
I'm with you, Divine, all the way.
Okay, thank you so much. Now, what do you think drives this explosive growth in market value?
In terms of the stock exchange?
In terms of the fact that we now have the capital market now contributing to the GDP growth?
We've discussed this before. We're still talking more of FPIs. Our stock market is actually attractive right now because if you look at the returns people are lucky to have, there, it's quite enticing, especially when you compare it globally. If you are outside Africa, or let me say outside Nigeria, you find out that making 40, 50, 60% annually is a whole lot. It's in Nigeria that people don't even appreciate when they make 10% in a month. They feel that, what is this? Because of the way the country it is, and it's usual with third world countries, even in other countries, this is applicable. But if you look at it globally, if somebody, for example, puts in $1 million somewhere, and at the end of the year, they're telling him that he will get 300,000 out of that 1 million, it's like a steal. So this alone is affecting the investments, coming into the Nigerian Stock Exchange, because as far as Naira is stable, or Naira is, at least within a range, you will find out that it is very possible for you to get your dollars in and make some good money and get your dollars out. So I think this is one of the things that is going on. I missed other things. This is one of them where people were having a lot of FPIs from outside, you know, and it's giving a ripple effect, because if I do this investment and I get good profits over it, I'll tell one or two people or I will invest more. So that I think that's part of it.
Okay, so how do you think, or how can liquidity, you know, and efficiency be improved to sustain this confidence?
Well, you remember when this government came in, this particular administration, we're battling with some backlog of payments of aviation money. If you remember, that, you know, some airlines international airlines were charging Nigerians to pay in naira, but when it got to the time for them to now get their money back in dollars, they were having issues, backlogs, and everything. And you see that immediately this particular administration came in, the governor of CBN started tackling that particular thing. And as of today, I don't think that exists anymore. So this example is enough confidence, that there's enough liquidity for you to come in, do your business, and get your funds out.
What does this mean for our economy and to you, and how does this translate to a common Nigerian? How would you explain it?
Well, to a common Nigerian, it's just that you can also be part of the moving train. For our economy, it's a good thing, not the best thing, but it's a good thing that at least funds are coming into the country, and more funds are going to come. As far as those funds that came earlier can actually be pulled out, then it gives, you know, investor confidence that, oh, you put $1 billion, you can get your money out. So for another Nigerian, you can join the moving train. There are so many ways it affects. But let's say for a retail investor, for example, that has 100,000 naira, 500,000, 10 million, you know, you can also join the whales, you know, to do some level of investing in the stock market, in the stock exchange. So an average Nigerian can be part of these groups. That is one of the things that is affecting an ordinary Nigerian.
Okay, thank you so much for that one. Let's head straight into the stock market updates for today. So the global markets trade cautiously today as investors weigh macroeconomic data and upcoming policy signals ahead of major U.S. earnings. We also Nigerian equities look steady as bond auction and debt data feed into investor sentiment amid regional macro shifts. Emerging market assets, including Nigerian equities, are drawing attention as portfolio inflows rise and FX stability improves. That wraps up today's Business Lens. Thank you so much, Economist Abiola, for being on the show today.
Thank you, Divine.
Okay, so keep it locked here to be informed. Remember that understanding those numbers means understanding your money. My name is Divine Alex. Catch us again on Thursday at 11 a.m. and make sure to follow us across our digital platforms for more updates. Don't forget to stay with Rapid TV. Bye for now.